second. It's now, it says for me now this meeting is recorded. Does it say for you also?
Yeah,
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 I
it
think
made
it's a
an
new
announcement.
feature.
New thing they have
Mhm.
added. Yeah, bro.
Yeah.
Nice thing. Yeah. Okay. All right. So we were at, give me 1 second. We were analyzing the, a particular nature of expense, a relationship between income, tax, and a particular expense, which in our case it was interest expense. And if I'll just quickly brief about it once more, here is the example that we are at right now. So we have net income of 70,000. Then by mistake we have forgotten, or the accountant has made a mistake of not including an expense for interest on a loan taken for 50,000 at the rate of 10%. And we are now trying to determine what is the effect when we implement that. So the interest comes to 5,000, and as our net income is 70,000, so our gross income must be 1 lakh, because as I said, tax rate is 30%. So I'll just write that down here. Tax rate is 30%. Now that tax rate is 30%, that means 70% must be the net income. If 70,000 is 70%, then net gross income is 1 lakh. That we have already done, we have covered. Now that we have the gross income, we deduct the interest of 5,000. That comes to a revised gross income of 95,000. Or you can say it PBT, profit before tax. Then you calculate the tax at the rate of 30%, that comes to 28,500. Then you calculate the net income, that comes to 66,500. When we analyzed it a little bit, what happened in these two scenarios, scenario one where we had a profit of 70,000, scenario two where we had a profit of 66,500, we saw that expense is increasing by 5,000. However, income is decreasing only by 3,500. Now, I wanted you to tell me the reason why there is such difference. Now, over to you. Any reasons that you got?
Because
Maybe
the
because
tax
that,
rate.
yeah.
Okay, go
Go
ahead.
ahead.
Go ahead.
Yeah, Anisha, go ahead.
Okay. So the tax rate is on the initial income, right? So if that changes, then we have a lesser deduction also.
Okay. Anybody else? That's absolutely correct. Yeah. Anybody else?
Yeah, I was gonna tell the same. Like the total income has decreased
Mm-hmm.
because we have added the interest.
Uh-huh.
So tax over it is the same.
Mm-hmm.
Then the total amount which we have to pay will also decrease. It was for 1 lakh previously.
Okay.
Now the 30% tax calculation is only for 95,000. So
Correct. And what is the, that means you are saying we have got some benefit. Am I right?
yeah,
We have got some
right.
benefit. Does everybody agree we have got some benefit by including an expense? We have got a benefit.
Yes.
Everybody agrees to it? Now, how much is that benefit? Can you tell me? You have those numbers right in front of you. It's right there. What is the amount of that benefit that you are talking about?
1,500 got
Absolutely correct. That's
okay.
1,500. So basically, because there is a new expense that is being deducted, and the tax calculation is changing because of that, our tax amount, ultimate tax amount is decreasing. Ultimate tax amount is decreasing by how much? 1,500. Now, I mean, which is exactly why your ultimate net income is decreasing only by 3,500. Even though you are including an expense of 5,000, your net income is getting affected only by 3,500. Now, let me ask you one thing. If I'll ask then, what is the effective rate of interest for you for this loan, I'll ask that once more. Then if by including this interest rate you are getting some benefit, what is the final or effective rate of interest for this debt, for this loan? Can you suggest? Is it still 10%? What do you think?
No, it's a little more.
No, you said no. Okay, and why no? And how much is that? Should it be? How much effectively it should be? Any guesses? That's all right. I'll tell the way. Any guesses also fine. No problem. Now, if you look at it, your net income is ultimately decreasing by how much?
7%, right?
Yes, absolutely
It
correct.
will come to
7% is the
7%.
correct answer. Absolutely right. Let me tell others also. What is happening here, if you look at it, earlier, before interest, before you included interest, your net income was 70,000. After you included the interest, the net income became 66,500. What is the final effect of it? The final effect is 3,500, isn't it?
Yeah.
Yeah, 3,500 only. So final effect is 3,500. No matter you have paid 5,000 for it, still you will take final effect, because that is how it is affecting your business. If you do 3,500 divided by 50,000, 50,000 was what? Your principal amount. It will come to, can somebody do it? It comes to
10%.
7%. Yes.
7%, yeah.
Can somebody tell me there is another way of calculating the 7%? Do this, okay? I'll just give you a hint. You do 10%, which was our original one, multiplied by 1 minus tax rate, that is 30%. 10% into 1 minus 30%. How much do you get? Can somebody tell?
7%.
7% only, right?
See,
So
7%, yeah.
yes. So without I gave you the formula. We can derive the formula also. I'm not going into the derivation. Either way, that can be done. So you can either calculate by calculating the amount, or you can go by this formula also. Earlier rate, the basic cost of debt multiplied by 1 minus tax rate. When you do that, gives you the effective cost of debt, that the cost of debt that you have to use, basically. Now, this exactly is the concept that I wanted to tell you, which is the 10% is called before tax interest rate. 7% is called after tax interest rate. I'll tell that again, okay? 10% is called what? Before tax interest rate. 7% is called after tax interest rate. Makes sense, right? In the 7%, tax is getting deducted. That's why we are calling it after tax interest rate. Any doubts in that? Okay. Now that we know the terminology also, I'll show you one portion of a question. Okay. Can you look at this line? Bajaj Exploration currently has 6% after tax cost update. Are you able to understand what it is saying exactly by mentioning that word after tax?
Yes.
That means that is the effective rate that you have to consider. However, if in a question, if the before tax rate is given, what should you do? You should convert that to after tax, because the effective tax rate is the after tax one. That should be considered always. Now, the moment you see a before tax rate, then you multiply 1 minus tax rate to that in order to calculate the after tax rate, and in the calculations you take that into consideration. Is that okay? The whole logic was that only, whole discussion was for that only. In case they won't change, because in the questions they're not changing, in case something happens like sir did in the mid-sem, no, he changed certain things, scenarios. If he changes that, at least we know what to do. Is that okay? Any
Yeah.
doubts, guys?
Yeah, there is.
Okay.
No, it's clear. Yeah.
Awesome. All right. Then I'll just do
So,
one more.
Dheeraj,
Please.
One thing, so when we calculate from EBIT,
Yeah.
right? When we pay the interest, we pay before tax interest only, rate only, right?
Before tax rate only. Yes. When we pay, we pay before tax rate only. Yes. You're right.
And this is for how will this be used in the solution what you're talking about?
In the solution, what happens is you take into consideration after tax one, not the before. Even though you pay the gross one, you pay the before tax one, still you will consider the after tax. You know why? Because even though you paid before tax, because of that payment, you will save some tax afterwards towards the end of the year, which is why that rate becomes less only automatically. So for the decision making purpose, never take before tax rate. In that case, your decision will not be appropriate. Always take into consideration after tax rate. Right? Suppose I'll give you an example, a simple example of this, just to clarify. I'll tell you. You do one thing. You donate 10,000. I need a 10,000 money in my charitable organization. You would get tax benefit for it. I tell you, simple example. Okay, 10,000 you give me, and you will get taxable benefit for it. One more person comes, sir, that organization is asking you for 10,000. You know what? I don't have tax benefit, but you pay me only 8,000. He said, I only have 8,000 requirement. You don't have to, I don't have tax exemption, unfortunately, but you have to only donate only 8,000. You do it for me. Suppose you are in 30% tax slab. Suppose you are in 30% tax slab. Which one is better? This is a decision making, right? Personal level, when we are going ahead and donating to somebody, this is the decision making that we face. Which one should you donate in? What do you think? My question was clear, no?
Sorry, I was on mute.
Oh, is
No,
it?
I'm saying I'll go by the 10,000 one.
Why is that?
Because I'll get 3,000 rebate
Yes.
later on. So
Yes. So ultimate effect is only 7,000, right? Ultimate effect is 7,000. So when you are comparing, when you are making a decision, you are not considering 10,000. Even though you are paying 10,000, still you are taking into consideration the tax benefit that you are getting because of it. So you are taking the after tax value, not the before tax. So after tax will always be taken in these kind of decision making questions when we are doing this. Financial management is all about decision making only. So that's why that's where its relevance lies. Always take after tax, not the before tax one.
Okay.
Yeah. Any other doubts, guys? Okay. Okay. I'll just quickly go through one derivation that I made about what do you call it? The WACC. If you remember the first example that we did, we had 10,000, 15,000 and 5% and 6% loans, right? And we multiplied those, we calculated the interest rate 500 and 900. We added those two totaling 1,400, and the total of the debt came to 25,000. The WACC we calculated, the final effective rate of interest we calculated as 1,400 divided by 25,000 is equal to 5.6%. Now there was this another way which Shell said, and I gave a little bit of clarity there. I told also I'll be dealing with it once more when we'll be moving to the question. After this one will be moving directly to the question, and I'm not going to solve the question. You are going to do only. Now let's just remember that part. Okay, what we did here, we took 10,000, we multiplied 5%, we calculated 500. We took 15,000, multiplied 6%, we calculated 900. 500 and 900 we totaled, and 10,000, 15,000 we totaled. We did 1,400 divided by 25,000, and we calculated the WACC. Let me do the exactly same thing, but in terms of a derivation. Okay, so here is a kind of format where I have the exactly same thing, but in terms of some denomination. Now, X and Y are 10,000 and 15,000. A percentage and B percentage are the percentages. 500 and 900 comes to X A percent, Y B percent. Do you agree?
Yeah.
Yeah. Now, total of that comes to X A percent plus Y B percent. And this side, the total comes to X plus Y. Now, just the same way we did 1400 divided by 25,000. Similarly, in order to calculate the, please, yeah.
1 minute. That X, this one you are talking about will be X into A. It will not be percentage, right? It will be absolute amount.
So A percentage, when I say, you
Oh,
say
X into A
5%.
percent you are
Yes,
saying.
yes,
Okay.
yes, yes,
Into
yes.
A percent
Into
you
A
are saying.
percentage. Yes, yes.
Oh, okay.
Yeah, yeah.
No, I took that X into A, that
Oh.
much percentage. Okay.
Oh,
No. Okay.
no,
Got
not
it,
that.
got it.
So XA percent plus YB percent is your 1400, and X plus Y is 25,000. Now, in order to calculate the WACC, we divide those. XA percent plus YB percent whole divided by X plus Y. This one I'm talking about. Let's segregate these two. This part becomes XA percent divided by X plus Y. Other part becomes YB percent divided by X plus Y. Any doubts until this point?
No.
Basic mathematics. Now you take out the percentage, A percent and B percent from these. Okay, this part becomes X divided by X plus Y into A percent. The other part becomes Y divided by X plus Y into B percent. Does it sound familiar?
Yeah.
Yeah. Can you look at it? We were calculating ratios of these, no? The ratio for X is nothing but X divided by X plus Y. Am I right?
Yeah.
Ratio of Y is
Yes.
nothing but Y divided by X plus Y. Same thing is happening. So either way you do, same thing we are doing only. Whichever way is like easier for you to grasp and remember, go for it. Both are fine. Either you calculate ratio of each of them and multiply the ratio with the percentage, add those two factors, you will be having the WACC, or you go by this simpler way, calculate the interest for each and add the interests, divide that by the total value. Is it okay? Any doubts, guys, in this?
Nothing.
Oh, okay, awesome. Awesome then. Then I'll quickly move on to one more example. One more example that I wanted to discuss before moving on to the question. So this is again the same thing in terms of what we did in the top one. I have just modified the values a little bit. So, okay, yeah. What happens is here, net income is 90,000 and suppose debt is 60,000 and at the rate of 6%. So that comes to 3,600. Our tax rate is, suppose in this case is 25%. Okay. So tax rate is 25%. Can somebody tell me, if the net income is 90,000 and tax rate is 25%, what is our gross income?
$67,500.
No.
90,025 tax rate. That's all you were asking, no?
Yes. Do you remember that analysis that we did? Where
Is it 1,20,000?
yes, that is absolutely correct. So if tax rate is 25%, what is 75%? Aswati, are you able to connect?
No, Dheeraj, I'm
So
not
we did this.
Actually, you taught us this. We did the X method. I mean, I did the X method.
Oh, is it? Yeah, go for X method
Yeah,
only. Yeah, that is easier. Yeah.
asking for the total. Okay. I didn't
Yes.
get the question only.
Oh, okay. Yeah. Gross income only I'm asking. Gross income.
Yeah. Okay.
So that becomes 1,20,000, right?
Yeah.
So
120.
in the first scenario, which we have it right here, 1,20,000 and the tax on that is 25%, which comes to 30,000. Our net income coming to 90,000, and our interest rate is 60,000. 6% for 60,000, that comes to 3,600. When we deduct that, we get a revised net income, or we call it as EBT, earning before tax, or PBT, whichever it is, that comes to 96,400. 96,400, you multiply that by 25% tax, that comes to 24,100. That gives us net income of 72,300. Exactly similarly, if you look at it, our
Dheeraj, this will be 1,20,000 above, right? Gross
yes,
income.
yes, you're right. You're right. I made a mistake there. Yes, you're right. So 1,20,000, that changes the values a little bit. So now the revised, EBT becomes 116,400. Then the tax becomes 29,100, and our PAT final income becomes 87,300. If you look at it, the expense is increasing by 3,600, but our income is decreasing only by 2,700. Now, in the method that I told, simply do 6% into 1 minus 25%, 1 minus tax. That gives us how much?
6.
4.5%, right?
Yeah.
4.5%, is that okay? So that is our effective interest rate that we are actually incurring, 4.5%. If you do 2,700 divided by 60,000 also, that would give you 4.5% divided by 60,000, 4.5%. Yeah. So I just wanted to repeat that once more, so that characteristics remains for every example that you take. Having that said, let's move on to questions directly. Before that, let me ask you if you have any doubts in anything that you want to.
Dheeraj,
Mhm.
when we are getting that 12, no, 1,20,000 there, I'm getting an error. So if we are
Mhm.
considering the initial amount as X, then 75% of X is equal to 90,000, right?
Yes.
So then X is coming as 12,000.
No.
How are we getting 1 lakh?
No. No.
We use a
75%
bill
of.
of 9,000 instead of 90,000.
Yes.
Sorry?
You have used 9,000.
No.
Do it
So
once more.
7.5X is 90,000, right?
90,000. Do 90,000 divided by 0.75.
Oh, right. 0.75. I'm got it.
Yes.
Oh, got it.
Yeah. So every time remember, whenever we say percentage, that means 0 point something something. So never do the whole value. Okay. Now moving on to the question directly. The question reads: Amit had just been awarded his degree in business. He has 3 education loans outstanding. They all mature in 5 years and can be repaid without penalty at any time before maturity. The amounts owed on each loan and the annual interest rate associated with each loan are given as follows. So 1, 2, 3 balances are 20,000, 12,000, 32,000. Interest rates are 6, 9, and 5. Amit can also combine all 3 and get an annual interest of 7.2%, again for 5 years also. Should Amit do nothing or create a consolidated loan? Now, task for you is to calculate don't look at it, solution is already there. Calculate the WACC first, then we will do the analysis part, whether he should go for it or not. Go for either way, both are fine. Calculate the amount or do that other way also, that's also fine. I think John joined us for a few minutes, but he left. I think that's because he has not watched the last class, morning class. So it's all right.
Dheeraj, I am little bit lost where to start this.
So we have balance sheets due 20,000, 12,000, 32,000. Annual interest rate is 695. You have to calculate a final effective interest rate, which we call WACC. Okay. So there are 2 methods. Either you can calculate interest for each. Suppose, for example, in the first one, balance due is 20,000. Annual interest rate is 6%. What is the interest then? What is the interest amount that you have to pay?
We have to calculate this 6% of 20,000.
Yes. So you calculate that for each and you add all the interest. Okay. And on the other hand, please, yeah.
Sorry, then what is that given in question? They have already calculated that, right?
No, 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 no,
7.2%.
no. That
The
is different.
new one which they are giving.
Yeah. So what the
Which,
bank is saying is they'll write off all the existing loans. They'll give you one loan for 64,000 at the rate of 7.2%. Now it's your choice whether you say yes to bank or no. The decision
oh, okay. So
will
they
take
have
into
to first
consideration.
calculate separately
Yes,
and then.
yes, 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 yes.
Okay.
Exactly.
Yeah, got it. Thank you.
Mhm.
Dheeraj, we have to. I'm doing it by the first method, not the
Okay.
x a percent into x by
Okay.
x plus y,
Okay.
not
Okay.
that one.
Mhm.
So I also came to this as I saw in your screen. I have also come to this 3,800 by 64,000, but
Mhm.
for that I'm getting 5.9%.
Is it? No.
Just
Three.
divide those two things. You don't have to subtract anything. No? 3880 by 64000.
Yeah.
6.06.
I'm making too many mistakes today. Sorry, I did 3,800 instead of 3,880.
Okay. No problem. No problem. There
Very
are
bad
so
silly
many
mistakes.
numbers,
Sorry,
no?
sorry.
No, no problem. There's so many numbers, no? Here and there we'll make that mistake. That's all right. That's what is called. They call it
Even
transposition error.
copying paste. Yeah, even copying pasting
This
is
keeps
copy
happening in
different
exam.
cell also.
I mean, you imagine now. I mean, in for us, commerce students, this is one of the common errors that we make because we are bombarded with numbers, right, in the exam. So this is one of the things that we do often. We do all the calculations. I have a practice personally. After completing the question, I go through the answer once more, especially for the calculations, and in that I easily find 2-3 mistakes here and there. So
Yeah,
yeah.
happens to me every exam.
Exactly. You have to have that practice of, you have to keep
Especially
5 minutes just to go through that calculations once more. Add everything, subtract things, divide things, and see whether you have written the correct number. No other way.
True. But the worst was those loan amortization tables. There, if we make one mistake, then we have to redo so
Oh
many
yeah.
things.
That's. I mean, terrible. You have to change everything.
Yeah.
Crazy. And in our exams, what happens is for accounting, if the balance sheet is not matching, then that's a headache. Now we have to go back. We must have made some mistake here and there. 500 rupees, we have made a mistake that is reflected in the final one. It won't match at all. So there are people who lose exams only because they're stuck with one question trying to find out where have I made a mistake. So better to let go sometimes, even if it's not matching, let it go. It's all right. It happens.
And pray for step marks.
Yeah, exactly. Everybody got it? The answer?
Yeah, 6.06%.
06. Yeah. Now the decision making, you have the option of 7.2%, 6.6. Obviously, we'll go for 6.06, right?
Yeah.
Yeah. Why will you pay 7.2% to somebody where we are actually paying right now 6.06? We are already done with the first question. Let's go to the second one. Here is the question. Roman Limited is trying to decide whether to revise its target capital structure. Currently, it targets a 50-50 mix of debt and equity, but it is considering a target capital structure with 70% debt. Bajaj Exploration currently has 6% after-tax cost of debt and 12% cost of common stock. The company does not have any preferred stock outstanding. What is Roman Limited's current WACC? Assuming that its cost of debt and equity remains unchanged, what will be the Bajaj Exploration WACC under the revised capital structure? Now, forget about the third one, that is theoretical. Now, let's calculate these two. Current WACC. Can somebody calculate? Are you okay with the structure of the question? Do you need clarification? So what they're saying is 50-50 mix of debt and equity. That means ratio is 50-50, right? You cannot go by the other way. You have to go by this way, the ratio one, the A percentage, X percent, the one I told, no? You have to go by that way because the other way is not possible at all because the values are not given.
Cost of debt is 6%.
Anybody finding it difficult? I can repeat that process, no problem.
There is that process I understood, but I'm not able to apply it to the question.
Okay, now make three columns. Okay, in one column have the weight, the ratio mentioned. The ratio for the date is how much? Can you tell?
50-50.
50-50.
So what is the ratio for debt? If 50-50, what is the ratio for debt? That's my question.
1/2, right?
Yes, exactly. Either 1/2 you write or 0.5 is also fine. Okay. And the same for the equity also. Just write it down. In front of debt, 0.5, equity, 0.5. What is the cost of debt?
6%.
6%.
6%.
Is
Right
it 9?
next.
Is it 9, Dheeraja?
9 is exactly correct. We go for the second one. Huh? If it is changed, then what? If you have already got it. So for others who have not completed, so what you have written 0.5, 0.5 debt equity, then you write a debt cost of debt is 6%, right? Right in front of, so adjacent to 0.5 of debt, you write down 6%. Adjacent to equity, you write down 12%. 12% is the cost of equity. Yeah, you multiply those two, 0.5 into 6%, 0.5 into 12%. You total those two, the final that you multiplied right now. How much it comes to?
Second is 7.8%.
7.8% is absolutely correct. Did you get 9%?
Yeah, 9%.
Perfect.
3 and 6.
Try the second one now. Now in the second one, what they're saying is debt is 70%. If debt is 70%, then the equity is how much?
30%.
70% only.
Debt, no, if debt is 70%, equity must be 30, no? Yeah.
50-50 it's written.
No. 50-50 was scenario one. That they are saying that there is another scenario where our target capital structure is 70% debt. Now, if as a target the company is having that, our debt can be 70%, then equity has to be 30%, right?
Yeah, correct.
Repeat the same calculation by just changing the ratios to 70 and 30 percentages.
7.8%.
Absolutely correct. Did everybody get it? I think it will end in 1.4, 1.5 minutes. We'll just join back in the link. Did you find it? The answer 7.8. Any doubts, case, until this point?
No, I think this is.
No, Dheeraj, I got it.
Awesome.
That's
Awesome.
7.8. Got it.
Yeah, awesome, awesome. Okay, now quickly, I'm asking you a question. You have now solved already a question based on that concept. Let me ask you, what is cost of debt?
Cost of debt is interest we pay, right?
Okay, yes, that is absolutely correct. Can you derive it? Can you tell in terms of what multiplied by what or what divided by what comes to cost of debt?